Thanks. Pleasure to be here today. So, as was set up, I'm going to be talking about what happened with the Great Recession in the United States. To quickly give you the main take-home, it wasn't so bad. So, we dodged the bullet to a substantial extent. The Great Recession had a substantial impact on the U.S. economy. It started there, but obviously didn't end there. As I said, the bottom line impact is that while it's not immune, long-term care didn't do too badly. So what I want to do just quickly is to give you a sense of what the economic impact of the Great Recession was. GDP fell by 0.3% in 2008, fell by 2.8% in 2009. By 2010, the official definition of the recession was over, although economic growth was pretty slow. Most dramatically, housing construction fell by 2/3 between 2006 and 2011. Unemployment basically doubled during the recession from 4.6 to 9.6. It's now about 6%, so still higher than it has been in the last 15, 20 years, but certainly compared to Greece or Spain, the unemployment's relatively low. Total employment did fall substantially by about 6 million jobs during the course of the recession. So this is what happened in terms of the national federal budget deficit. As you can see, during 2007, it was only about 1.1% of GDP. In 2009, at the height of the recession, it was almost 10% of GDP, but it's been declining since then, and for 2014, the projection is that the federal deficit would be about 3% of GDP, so not so bad by international historical standards. So one of the key things that distinguishes, I think, the United States from some other countries in terms of their response to the recession was that there were a number of initiatives in the United States that basically provided economic stimulus, that is to say more spending during the recession. One of the major parts of that was the American Recovery and Reinvestment Act, otherwise known as ARA, and the Affordable Care Act, which was the big health reform that was passed in 2010. So one of the things that ARA did was it increased the federal matching rate for the Medicaid program, which is the federal state health and social care program for the low-income population, from 2008 to 2011. So that pumped an additional $103 million into states so that they wouldn't have to cut the program. Importantly, ARA did not allow for cuts in Medicaid eligibility, although it did allow for cuts in benefits and payment rates. So if states took the money, which all of them did, they were not able to reduce eligibility. And then there were some other provisions in ARA that, in essence, pumped more money to the states to offset their reduction in revenues, so they were able to maintain services in the health and social care area. And then the passage of the Affordable Care Act in 2010 included a number of provisions to provide incentives to states to provide more in the way of Medicaid, home and community-based services, several of which came with a higher federal Medicaid match, which meant that the incremental cost to the states of providing these services were lower than they would have been in the past. So just quickly, a kind of thumbnail sketch of the way in which social care is organized in the United States. Like our friends here in the UK, social care is primarily means tested. Medicaid is the primary source of public funding for social care, and it's a federal-state matching program, and it's mostly, although not entirely, an open-ended entitlement program. And so that means it's not subject to a direct appropriation. There isn't a cap per se, and it requires a kind of active intervention and government decision to reduce expenditures. Otherwise, expenditures are whatever eligible people find their way to services and whatever services are provided that are covered. Medicare is another source of payment for quasi-long-term care services. Medicare is the public health insurance program for older people and younger people with disabilities. And while it does not cover classic long-term care, it does cover care, short-term, post-hospital, rehabilitation-oriented care in nursing homes, and it does provide skilled home health care. And so there's some opportunities for cost-shifting back and forth and for Medicare to fill some of the gaps. So Medicare, too, is not an appropriated program. It's an insurance program, and so expenditures are a combination of who's eligible, the services they use, and the payment rates, and it requires a direct intervention to control those expenditures. In addition, we have many smaller programs at the national, state, and local levels, and I'll talk about some of them, and we have a small private long-term care insurance market. So this graph basically shows total Medicaid expenditures by year. And so as you can see, it pretty much went up steadily through the recession, 2008, 2009, 2010. It had reached a high point of $415 billion in 2011, and then actually fell a little bit in 2012 down to $410 billion. So social care expenditures also kind of went up steadily from 2005, but then basically leveled off in 2011 and 2012. So in real terms, declined a little bit during that time period. And so this shows what happened in terms of the average annual rate of growth in Medicaid social care expenditures. So during the main recession, 2005 through 2010, expenditures still grew by 5.3%, but in the more recent period of 2010 through 2012, the increase basically fell to nearly zero. So, so now I'm going to just present some data that disaggregates some of the social care expenditures. This shows Medicaid social care expenditures for older people and younger people with physical disabilities. And so, as you can see, it went up through about 2011 and then leveled off between 2011 and 2012. Here's the same graph for people with learning disabilities. the leveling off started a little bit earlier here. So by 2010, expenditures were about $41 billion, and it basically stayed the same over the next several years. So again, taking inflation into account, there'd be some real reduction. And here's what happened with Medicaid social care expenditures for people with serious mental illness. So it grew from 2007 through 2009. Then there was a big jump in 2010. I'm not, frankly, too sure what that represents. Part of that may represent options within the Affordable Care Act, basically for states to refinance some of their state-only programs through the Medicaid program. But then there's been a decline since then. So one of the issues that was discussed in the previous panel was the balance between institutional and non-institutional services. And between liberals and conservatives in the United States, there has been a broad consensus to change the balance of spending and services between institutional and non-institutional care to do more on the home and community-based service side. And so this lumps together older people, younger people with physical disabilities, people with learning disabilities, and people with serious mental illness. But as you can see, the line just keeps going higher and higher and higher. It does sort of stall a little bit between 2010 and 2011, but then it starts going up again. Now, averages hide a lot of variation, and where this growth has mostly been has been people with learning disabilities, a little bit less younger people with physical disabilities, and much less for older people. But still, the trends have all been moving in this direction, and I think there'll continue to be that kind of movement. So trying to get behind those numbers a little bit, this is what has happened since 2001 in terms of the number of Medicaid home and community-based services participants, the number of people receiving services. And so the numbers here have gone up significantly over the time period. So in 2001, we were at 2.1 million. By 2011, we were at 3.2 million. So that's a 50% increase. But as you can see, there have been substantial periods where things have kind of stalled out. So 2005, there's 2.8 million, and 2007, there's 2.8 million. Then it went up a little bit, but overall, there's been growth over time. Yes?
How has the Great Recession affected Medicaid enrollment? Has it increased over the years?
So Medicaid, and I don't have those figures, but my impression is that Medicaid enrollment overall has increased substantially, and certainly with one of the major provisions of the Affordable Care Act has been to dramatically raise the eligibility. And so lower income people who previously would not have been eligible for Medicaid are now eligible. And for those states that have adopted the option to expand eligibility, that has been one of the major ways in which people have gotten health insurance. But for social care, those are not covered benefits in the new set of coverages that are provided. So what I don't know is what has happened to enrollment for the aged, blind, and disabled population who receive social care services. So one of the major issues, I think, that we need to think about when we look at these issues and look at what's happening in terms of social care is, so how is social care doing relative to other kinds of spending? And so the top line is basically state Medicaid expenditures, federal and state Medicaid expenditures for over the time period. And as you can see, they go up substantially, and then, I'm sorry, the top line is education expenditures for kindergarten through high school. And so as you can see, they go up, but then they really kind of stagnate. They reach a high point in 2009 of 334 billion, but then they fall to 327 billion by 2012. And so when you add in inflation, there have been significant reductions. The green line in the middle are the social care expenditures, and they have been sort of either going up or have been stable. And then the line that's really kind of the most shocking, given that we have been talking about the recession, are the public assistance expenditures, which basically didn't increase or decrease at all over that time period, despite huge increases in the unemployment rate. And what that basically reflects is that back in 1996, welfare was basically converted from an open-ended entitlement program to a block grant to the states with a fixed amount of money and with a whole bunch of work requirements. And basically the role of cash welfare has really kind of declined dramatically and has not fulfilled one of its primary functions, which is to be a counter-cyclical source of income for people when the economy goes bad. So one of the other things that has happened over this time period has been an increase between 2003 and 2013 in the number of people on waiting lists for Medicaid home and community-based services waivers. Now, there are kind of two things you need to know. One is part of the home care that is provided through Medicaid is through an open-ended entitlement program. But the other part, and the part that is kind of the more creative part, is through these home and community-based services waivers. And that basically allows states to cap the number of people that they serve. And some states have maintain waiting lists, others don't. Some change the definition of who gets on the waiting lists over time. So you have to take these numbers with a lot of grains of salt. But I think the basic story is still pretty clear and pretty dramatic, which is that the number of people on these waiting lists have increased substantially over time. For some reason, the values didn't show up on the graph, but I think the heights of the graph make it pretty clear what's happening. For reasons I frankly don't quite understand, the number of people on waiting lists actually fell between 2008 and 2009. That might reflect people being unemployed and therefore being available to care for their parents or relatives, or it may just be that states decided that it would be a little too embarrassing to maintain those lists. But the overall direction is pretty clear. So what I've mostly been talking about, or almost exclusively been talking about, is Medicaid. But there are other programs that provide services, and some are through the Administration for Community Living, which includes the Administration on Aging and a variety of other small programs for people with learning disabilities and younger people with disabilities. And so this is the appropriation, the set amount of money for the Administration for Community Living from 2006 through 2013, and basically it's flat. It does go up to $200 million between 2006 and 2013, but the story here is that it's basically flat, and if you went back, it would be flat. So a lot of other cuts in long-term care services, mostly for non-Medicaid services where states had to pay fully out of their own money. This is what has happened to long-term care insurance. The market has basically collapsed. A major reason for the collapse is that the rate of return that insurance companies were expecting on their reserves did not appear because of the collapse of the stock market and the very low rate of return now available on bonds. So which way for social care in the United States? Policymakers clearly want to try to avoid recessions, but recessions are an inevitable part of the business cycle. In the U.S., social care did pretty well in weathering the storm. A couple of reasons for that. First, a lot of the funding is through the Medicaid program, which is an entitlement program. The non-entitlement programs did much less well, especially at the state level, and really had substantial cuts. The national government not only funds its social care through this entitlement program, but during the recession provided extra funds to states to fund medical and social care. Health reform also included incentives to expand funding. There were also some legal protections that prevented states from reducing spending on social care. The Olmstead Supreme Court decision basically established a limited right to home and community-based services for the disabled population, which meant that cuts would inevitably end up in courts. So looking to the future, 2010 was the start of a turn to the right. The House of Representatives went Republican. 2012, the U.S. Senate went Republican. And at the state level, a lot of state turned from Democrats to Republicans, and that may be part of what you're seeing in the changes in 2011 and 2012. So the big social initiative in social care in the U.S. now that tries to bring a lot of these things together is an effort to integrate medical care and social care through managed care organizations, giving one organization the responsibility for both the health and the social care for people with disabilities. So part of the notion is to have savings on the acute care side that can be used to finance social care. But from a budgetary perspective, it also means that the expenditures are much more predictable for the states. because they set a capitated rate in advance, and they take their savings in advance as well. Most of these programs have a 5% cut compared to what would have otherwise been the case. So RTI has a large contract to evaluate these, but the government doesn't let me talk about what we're finding, so I won't. Thank you very much.
Thank you very much, Josh. And I think we'll move straight to the next presentation.
So today we're going to talk about the effects or the potential effects of the budget cut and instabilities going on specific to the German case. First, a bit of history. Perhaps. The German long-term care system represents more or less a widely regarded success story, both nationally and internationally. Its establishment in 1994 represents a radical path-breaking moment in welfare state development and in the post-Golden Age. In it, an entirely new branch of social security benefits can be found in Germany, and this expansion is entirely at odds with welfare state retrenchment and restructuring experienced in other policy areas, such as its most closest policy relation, healthcare. To some extent, expansion in long-term care has even come at the expense of these other policy fields, with trade-offs, particularly in healthcare, characterizing the foundations of the system. Moreover, long-term care, and perhaps this is the take-home point for our audience today, has not been undermined by the economic instability of the last decade. So in our presentation today, what we're going to do is briefly walk you through the system's institutional arrangements, focusing especially on issues of coverage, financing, entitlement benefits, and the provider market, as these have the greatest consequences for issues of access and quality, which are of interest to our audience today. Then we'll conclude by proposing a number of explanations for what can be seen as the success of long-term care policy in Germany, emphasizing in particular the strong role of a fiscally oriented policy rationale underpinning the establishment of the long-term care system in Germany, the political and economic resilience of the social insurance system type, and the relatively innocuous effects of the economic instability of the last decade in Germany. So prior to, just to speak very briefly of what was going on before 1994 in Germany, for those of you who might not know, prior to the establishment in 94, the risk of bearing long-term care services was borne first and foremost by the individual and his or her family, typically female caregivers in the first instance. And by last resort, there was a social assistance scheme that was funded primarily by the municipalities and states. And the policy rationale underlying this rather fragmented and non-solidaristic system rested on two principles. The one was that long-term care needs was primarily a private risk and was unrelated to issues of employability, and thereby it was up to the individual and his or her family. And the second principle concerned the belief or position that long-term care services in any case are best organized at the local level. Hence, the local level should be responsible for financing when the family fails. During the 1970s and 1980s, this status quo came under increasing pressure, and this had to do with several deficits in the system, which are quite obvious. That meant substantial changes in the socioeconomic context. Mainly, you had an aging German population characterized by low birth rates since 1965. You had growing feminization of the workforce that rendered the female caregiver model increasingly obsolete. And you had the protracted effects of the economic turmoil of the 1970s. which, due to public assistance being responsible also for unemployment benefits, then this was doubly burdening the municipalities. Despite these pressures, it nevertheless did still take 20 years for a reform to pass in Germany, and the reasons for this delay have to do with many political factors, many veto players within the system, a great deal of disunity in terms of policy positions and paradigms, even within political parties, and also a great deal of uncertainty on the part of all actors as to what the long-term effects of this, of the different options would be at the time. By the early 1990s, however, they did finally reach a somewhat highly contested consensus, and the system came into place. So what does this system look like? For one thing, social long-term care is administered by the LTCI funds, which are founded as branches of the healthcare system, the sickness funds. They are independent, but under the umbrella of the health insurance then system. What you don't have, for those of you who are aware of the competition between the sickness funds that was introduced in more recent years, this does not exist because all money goes into one single fund which covers all expenditure in the case of long-term care. You have a system of mandatory coverage for the entire population with some, and this is a two-tiered system in which all those who qualify for coverage under social health insurance system automatically qualify for the long-term care social system, but you also have private insurance for those people who earn above a certain threshold and who choose to opt out of social insurance. So at the moment you have something like an 88% of the population covered under long-term care with special systems for police, military, and firemen, and some 12% within the private system. In terms of financing, the costs for the long-term care system are financed mainly through contributions as on a pay-as-you-go basis with parity of contributions made between employers and employees. However, not all costs are covered by the system. Rather, a capped package of services is defined, and private co-payments and means-tested social assistance play still a very important role, however, perhaps not as it once did. As concerns mandatory private long-term care insurance, when it was introduced, the system retained strong elements of pay-go, as benefits were made immediately available to those who qualified, and the premiums have been capped for the elderly. With the introduction of the long-term care system, public financing for care has increased dramatically by a factor of 2.5. From 1997 to 2002, social insurance expenditure alone has increased by an additional 60%. And this has been mainly due to a rising number of beneficiaries. Some 30% of growth derives from that. Adjustments of benefits, which I'll talk about in greater detail. Additional benefits, particularly for the population suffering with dementia, which of course presents special challenges and growing challenges to the long-term care system. And different utilization patterns with people moving away from informal care more into the formal care sector, which is of course more costly. So in terms of entitlement, within this system, need for care or dependency is defined in terms of activities of daily living, where assistance is when it's needed for at least 2 activities, basic activities, and 1 additional instrumental activity for an expected period of 6 months. One qualifies, of at least 6 months, sorry. 3 levels of dependency are differentiated according to the frequency of assistance needed and the length of time required to carry out caregiving activities on the part of an informal caregiver. And this aspect of defining time in terms of an informal or non-professional caregiver is important because it reflects the emphasis that still carries over from the pre-1994 days of seeing care's first address as happening at the home and at best by an informal caregiver or family caregiver. Meanwhile, assessments of need for care are carried out by a medical review board for members of the Social Insurance Fund and a private company, Medic Proof, for those who are privately insured. In terms of the benefits, benefits are defined by law and include home care, nursing home care as well, day and night care in the case of ambulatory care, in the case of home care, recipients can choose between in-kind benefits or cash benefits, which they then have the discretion of using for an informal caregiver like a family member. In this way, informal care has received official recognition or formal recognition from the long-term care sector. And as I just said, it's still seen as the first address for caregiving. Meanwhile, community care is provided by both nonprofit and for-profit organizations, and their costs are covered up to a cap by the insurance funds. Also, cash and in-kind benefits can be combined. In the case of nursing home care, capped benefits are defined for care costs with no provisions set aside for board and lodging or for investment costs. So here, particularly, the importance of out-of-pocket costs and social assistance come to the fore. And we're going to see in just a moment that, in fact, a great deal of nursing home care is funded by additional sources of revenue outside of the long-term care system. Meanwhile, the federal government reserves the right to make adjustments to the benefit cap. However, prior to 2008, this was never actually done, not even for inflation. It was only due to a reform introduced in 2008 that it became necessary for the government to review the need for adjustments every 3 years. And this, in fact, has increased the purchasing power of benefits. In discussing benefits, it's especially important to note the issue of expansion, especially due to reforms seen in 2001 and 2008 and 2015, which extended services for people with mental disabilities. In 2015, some small improvements for all insurees were also provided, and this is going to be followed by an additional round of expansion to benefits in 2017 that will dramatically improve services for people with dementia, or promises to. Heinz, my colleague Heinz, can perhaps tell a more cautious tale about what can be expected there. Regarding the reforms of the current legislative period, legislation has been passed that will realize dramatic expansion in financing primarily by the way of an increase in the social contribution rate of some 0.5 points over the course of 2 steps. More specifically, 0.4 will go towards the expansion of benefits, which are expected to be augmented by some 20% in services. 0.1% will go into the Social Insurance Care Fund. Already underway are increases in personnel for inpatient services, as well as a broadening of the basic service package. So certainly expansion can be seen in the case of benefits. In a second reform step, it's also important to mention that a new definition for the need for care will be introduced, as well as a new assessment process for classifying the level of needs. And the system will finally depart from the distinction between physical diseases versus dementia. And this, precisely departing from this, will promises to introduce benefits, greater benefits for people with dementia. But like I said, Heinz can tell you some more about that later. It's important to talk a bit about the provider market for informal care. It's marked by private, for-profit, and non-for-profit service providers primarily, which serve both kinds of insurance, the social and the private insurances alike. What you see in the case of infrastructure is an enormous increase, and this has a lot to do with the abolition of a law in 1994 that saw the end to giving preferred access to non-private providers. Since then, you have an enormous boom, and if you take a look at the graph here, this summarizes developments in the formal care market for ambulatory services. As I don't have much time, I'm just going to very briefly walk you through it. What you mainly see is consistent annual growth in general, and private providers represent the largest share of the market, and this share has been growing from 51% in '99 to 64% in 2013. Meanwhile, growth in the overall number of providers has come nearly exclusively in the form of this private market growth, and so it's highly selective. Here, growth is something of 48% between the years of '99 and 2013, whereas social providers have shrunk some 13% and public some 14%. So again, growth has been highly selective and mainly situated in the private market. In the case of stationary home care, here too increases in the overall market can be seen. However, social providers maintain their predominance of the market share, unlike in ambulatory care. Oh, I'm sorry, yeah, if you don't mind pointing that out. It's not so easy to read, and I'm sorry for the German. Sorry about that. In terms of the private market, you have some 73% of growth since 1999. So this is, again, highly selective growth. The introduction of far greater private infrastructure in the care market has, of course, very important consequences potentially for access and quality, and I'd just like to talk about that a moment, as this is the interest of today's talk. What you have in the case of access in Germany is you have, through the social assistance program, far fewer people dependent on it. The share has gone down. And of course, this is very reflective of the fact that long-term care is no longer seen as a social safety net of the welfare state, and rather an entitlement, properly acknowledged. So I do have numbers of access with me, but I don't have time, I'm afraid, to go through that, but maybe we can skip ahead. Yeah, if you take a look at this graph here, you see the share of recipients on social assistance has gone down dramatically since the introduction. Heinz, maybe you could...
Would have been here somewhere before the introduction, 80%, and then gone down, right?
So this reflects that the long-term care system is in fact taking on the lion's share of the burden for cost through contributions. However, you do have the problem, and perhaps Heinz, you can go to nursing home remuneration. As I mentioned earlier, the long-term care insurance does not cover things like room and board. However, it also does not sufficiently cover the costs of care. And if you take a look here, and this is true at all levels of dependency. So, for example, you have long-term care benefits at level 1 covering some 1,023 euro, whereas the costs for care alone are 1,475. So there is a gap in what is actually covered, and out-of-pocket costs still pick up a great deal of the slack. And clearly this is an issue that has to be worked on. In terms of quality, if I can make a very long story short, we have a lack of data. There has been a greater emphasis on quality in discussion in the reforms language of the last years, particularly in 2008, and they have introduced official reporting measures that should become transparent. You can go to the next slide. However, we simply have a lack of data, and what data is available tends to look at infrastructural and procedural aspects and not enough at outcomes. So this is clearly something that has to be worked on. So in general, one can speak of great success in the German health long-term despite these shortcomings. One can speak of a success story, and if you move to the next slide, we have a situation where long-term care risk has been properly acknowledged as a social risk. We have established coverage for the whole population. We have reduced the number of people in nursing homes dependent on welfare. We've increased public spending by a factor of 2.5. We've dramatically reduced expenditure on social assistance. We're improving care infrastructure, at least quantitatively. But as I said, quality, although it's high on the policy agenda, has to be something that's more systematically researched. But Germany has also managed to work with a stable contribution rate for 15 years. I would like to just very, if you could go to the next slide, Heinz, point out where we see the reasons for this rather social policy darling status of the long-term care sector. Keep in mind that, as I said earlier, these developments and expansion, particularly in financing and in benefits, have happened with the backdrop of enormous cuts made in other policy areas. And so how does it happen that long-term care continues to expand and develop where retrenchment and restructuring has happened otherwise? We argue that long-term care success can be understood along 3 levels. The one is the policy rationale guiding its establishment and what keeps it in place still. You have a very fiscally driven system that was designed to basically relieve the dramatic burden of financing from the municipalities. And at the same time, when options were being considered for which system type should be adopted, the federal level was not keen on adapting a tax-based system, as this would imply a huge burden of costs for their coffers. And so you have a system that has been locked in place by both the local and federal level that is uninterested, and it would be unstrategic to take on any other system. And it becomes very difficult for the federal government to make any cuts, because that would imply a greater role for social assistance by the local level. And that would be hugely politically unpopular and probably not pass the legislation. So I'm trying to really be very quick here, I'm so sorry. It's actually much more complicated than that. But that would be the one issue we could talk about more in the discussion if you're interested, the policy rationale. The other line of reasoning concerns the fact that the social insurance system, we argue, is far more politically and economically insulated than systems such as tax-based systems. It's not easy for politicians to touch entitlements, and in order for changes to be made in the benefits, because benefits are defined and then budget follows benefits, unlike the other way around in an NHS system, in a tax-based system. Hence, it becomes very difficult for entitlement to be touched unless chronic unemployment should arise. And this brings us to the next point, the economic one. In Germany, we simply don't have that big of a hit. We had a bit of a bump in 2008, 2009 due to the economic crisis, and that's really it. We've had full recovery since then. So the potential role of chronic unemployment doesn't even play a part. What we rather see is continued expansion, particularly for people with dementia, and some original deficits of the system being met in recent years. And I'll stop there. I'm sorry, I know I went over.
That was the longest presentation so far. Expansion in the face of
Optimistic.
Impressive. We're going to move now to, so if you want to, you join back up after the presentation. So we're going to move to Pieter Bakx from Rotterdam University, the Erasmus University Rotterdam.
Well, thanks for the kind introduction, and thanks for inviting me here. I'm going to paint a slightly different picture, and that's also because the start, the point where the Netherlands started was a bit different. I'm going to be talking a bit about that as some sort of a background to what happened in the past few years. Long-term care financing in the Netherlands has been mostly public since the 1960s. And it's all been organized through a social insurance system that was comprehensive in 3 ways. That is comprehensive in 3 ways. It's universal. It covers everyone. it's broad in the sense that it covers many or basically all types of long-term care, and it's deep because it covers most of the costs. So co-payments, for example, are rather small, as this graph shows. Public long-term care insurance paid for more than 90% of all long-term care expenditures in the Netherlands. Well, for formal care, of course. For informal care, that's outside of this graph. But you already see that there's been something going on in the past years. It's very small. Co-payments have gone up a bit. Well, they've gone up dramatically for the Netherlands, but in the end it's still only 8 or 9% of the total expenditures. And direct government spending on long-term care has gone up a bit as well. But I'll get back to that in a second. First, the economic background of what has happened over the past couple of years. As in many other European and countries, unlike Germany, but not as bad as in Southern Europe, unemployment has gone up. And GDP has declined over the past few years, although recently it's been rising a bit again. And the government decided to cut expenditures as well because of the economic downturn. And that has affected public expenditures across the board. And as a result, the public finance deficit, which is the difference between the present value of all future revenues and all future expenditures, has improved from minus 4.5% to 0.4%. So now the present value of all future revenues is higher than the present value of all future expenditures as expected. And that's mainly because of changes in social programs. So for example, the retirement age has gone up. But healthcare also played a small part. Healthcare spending over the past 20 years has increased a lot until recently. Like the last 3 or 4 years, healthcare spending has stabilized because of a number of reforms. And that's also true for long-term care spending. So there have been reforms, and healthcare spending has stabilized. Was that because of these reforms? And that's hard to prove, actually. But I do have some ideas, and I'll try to convince you that probably these reforms at least helped a bit. As I explained before, the Netherlands long-term care was mainly financed through this public long-term care insurance scheme, which, unlike in other countries, there were very few demand-side restrictions. Co-payments were not that high. It was easy to get access to long-term care. And the government mainly tried to regulate long-term care expenditures through supply-side restrictions. But as the people from Germany already told, supply-side restrictions and a legal entitlement to care, these are a bad match, because people have this legal entitlement to care, and budgetary restrictions are not a reason to deny care in such a system. So if you want to keep long-term care expenditures down, as the Dutch government wanted over the past couple of years, you can do two things. You can limit the legal entitlement to care, as they did for some types of care, or you can try to do what other countries did and intensify demand-side measures. And in addition to that, what also helped, of course, to keep long-term care expenditures down were aging-in-place policies that encouraged people to live at home longer. most of these reforms affected home care as opposed to institutional care. There were some reforms in institutional care as well, but that was mainly, I'll get back to that later in this presentation, that was mainly an increase in the co-payments that people needed to pay for these services. But for home care, something else happened. So I make a division between non-medical long-term care, which is what some people refer to as unskilled long-term care, or maybe the more social or social care types of care, as opposed to medical long-term care, which is more the nursing and the personal care, which are more the skilled services. For non-medical long-term care, there's no legal entitlement anymore, because coverage for these types of care is now organized through the tax-funded Social Support Act. And municipalities, local governments now organize these types of care, and they're financed through block grants from the national government. And this reform started in 2007, and on average expenditures decreased a lot for these types of care. But there's been much variation between cities and between towns in how much how much expenditures changed. So in some towns and in some cities it actually went up, and in others it went down by about 20 to 40%. And that is because local governments can make their own decisions. But it's also because there used to be a lot of variation across regions in the use of these types of care. And through changes in the block grants, the national government tried to repair these changes, which is probably why in some parts of the country, use and expenditures of these types of care has gone up. For medical home care, so like personal care and nursing, something else happened. These used to be covered, like the non-medical long-term care, through the public long-term care insurance scheme. But since the start of this year, they've been covered through the Health Insurance Act, which also covers hospital care, GP care, pharmaceutical care. And for these types of care, there is still the legal entitlement to care, but there has been a change in how the demand for these types of care is restricted. And before there were restrictions at the patient level, so patients had to be eligible for these types of care to receive publicly funded home care. And they needed to pay a co-payment. But that has gone, because right now there is no centralized eligibility assessment for these types of care anymore. And there are no co-payments anymore. And instead, it's the insurer who organizes and who pays for these types of care that is being incentivized to buy the right types of care and buy the right types amount of care for people. These health insurers, they compete for enrollees. So they have an incentive to keep the premium down that they ask for the health insurance that they offer. But at the same time, they need to organize good care to keep their enrollees. And because these health insurers not only organize home care, but they organize health care as well, they have an incentive to organize to ensure that people get the most efficient mix of home care and health care. At the same time, like municipalities, these insurers would benefit from home care users who are expensive to them moving to a nursing home. So these health insurers have an incentive to organize right care. But maybe there's something wrong with the incentives as they are set in the system right now. So if this is going to help to keep costs down, let's see in a couple of years.
I'm sorry, why do insurers have the incentive to encourage home care users to move to a nursing home?
Because if someone, if someone lives at home, the health insurer pays for the home care that they need. Whereas if they move to a nursing home, nursing home care is still covered through the old public long-term care insurance scheme. So that shifts the costs of long-term care to the public scheme. And then the health insurer benefits from that. Is it bad? Actually. So, is it bad that these incentives for individual patients, that they are gone in this new system? Probably not so much. Before there were the co-payments for these people, and there was a centralized eligibility assessment, and neither of them seems to have affected the amount for care after all. For example, in 2013, the co-payments for home care and for institutional care increased. And that differentially affected the rich, who were affected more, because these co-payments are income and asset related. It differentially affected the rich and the poor. And there was some cost shifting from the public long-term care insurance scheme to individuals. Revenues from co-payments increased, for example, by 33% for home care and by 11% for institutional care. But there did not seem to be any behavioral response. So the people who were affected by this reform most did not change the types of long-term care that they use. But there is something worrisome about this new scheme, and I already talked a bit about that. Because one of the main reasons why long-term care expenditures have stabilized or are not going through the roof is that people stay longer at home. And this graph shows that between 2004 and 2013, the share of elderly that is older than 80 that lives in a nursing home has decreased by about a third. So it used to be 21%, and now it's 16%. It's a bit less, actually, the decrease. But anyways, it's substantial. And two things that might have contributed to that a bit are, for example, higher co-payments for institutional care and stricter eligibility criteria. Yet this aging in place policy, is that still gonna lead to further declines? Now that both municipalities and health insurers have an incentive to push people into nursing homes. And if it does not further decrease any further, how is that going to affect long-term care expenditures in the future? That's one of the main concerns when studying, that may come from studying the incentives that are in the current long-term care insurance scheme. So, to sum up, long-term care expenditures grew until 2012, but they stabilized thereafter. And some of these reforms are likely to have contributed or to contribute in the future to the decrease in the long-term care spending growth. Demographic changes, of course, may have helped too, but in the past we've showed that their contribution was limited. And I don't see any reason why that may change in the next couple of years. But as some sort of a concluding thought, yes, these reforms, they may help to contain the costs of long-term care, but they may also have other effects. So for example, they may have a negative effect on the health and the well-being of the elderly, and on the utility derived from being insured against the risk of high expenditures later in life, which are major benefits of an insurance scheme in the first place. And there's no evidence of this impact, this type of impact. And that is important because you can have costs on one hand, but there are likely to be benefits on the other hand as well. And in the next couple of years, I hope to show a bit about this impact as well. That's it. Thank you.
Okay, we've got 15 minutes for questions. Werner is already making to start, and I think the microphone is coming.
Yeah, this is primarily directed towards Josh and Heinz and Lorraine. Josh will know exactly what I'm going to ask, because I'm going to say Medicaid recovery. Was there any incidents as states who had to finance Medicaid sought to use their powers to recoup some of their costs from people who had benefited from Medicaid payments? And also in Germany, given that social assistance still contributes a quite substantial share of the total public expenditure costs of long-term care, if you add up the numbers you will see this, local governments which are very much facing budgetary constraints also are having an incentive, if they have had to make social assistance payments, to recover these payments. And I certainly read, when I read the Frankfurter Allgemeine and papers like this, I read these interesting court cases where people have actually got sufficiently far as to be dragged before the courts in an attempt to see whether they are not responsible for their elderly parents. So it seems to go on, and it seems to go on in particularly cases of fiscally constrained.
So it's complicated. So in the United States, the house is not counted towards eligibility compared to the situation here in England. So that means that people can enter a nursing home and become eligible for Medicaid and still have their house. Since 1993, states have been required to recover the costs that they spend on long-term care from the estates of people that they have provided benefits. There is very little data. No, I'll rephrase that. There is no data on the amount of money that states have required or have recovered from those estates. The last available data is probably 10 to 15 years old, and the numbers there suggested that they recovered very little from those estates. And partly that's because of the politics of doing that. It doesn't look very good to be going after the estates of poor, disabled, older people. But it also reflects the fact that despite the fact that younger elderly have high levels of home ownership, by the time they become 85-year-old disabled widows, they don't have those homes anymore, and they don't have those assets. So there's not that much to recover.
In Germany, at the moment, about 85% of the public expenditure is paid for by social long-term care insurance. So that's by far the biggest player. And if we think about the incentives different players have for long-term care funds, in fact, expenditure are not important, because the sickness funds that compete to each other, compete on health, not on long-term care. Every long-term care expenditure is financed by them together. So if we would double long-term care expenditure tomorrow, it wouldn't mean any change in their competitive situation. That's why long-term care funds normally are not so keen on cutting benefits. Municipalities, on the other hand, they are very keen on avoiding payments out of their pockets. That's why they are very strong advocates for high benefits on behalf of social long-term care insurance. So the municipalities who have to pay the rest, so to say, will always keep benefits high in the long-term care insurance system. And if you talk about court cases, then the third player comes into play. Of course, that's out of pocket. And everyone has an interest to shift as much of the burden to the people in need of long-term care themselves. And that's where the court cases occur. But don't believe everything you read in the Frankfurter Allgemeine Zeitung. I think that's also some legal niceties, and they have to be thought out. But by and large, I don't think it's that much of a problem. Now, when we have a new entitlement for long-term care, I'm quite sure for a couple of years we will go to court and fix the very regulations. So from 2017 onwards, there will be more court cases until a few things are decided then.
Yes, I have two questions on the Dutch case. And one concerns the information you gave that many users are not using all the hours they would be actually entitled to. So my question there is it because they are not informed, or is it the system which is allocating these numbers of hours to a lesser extent than actually would be right? My second question concerns the strange incentive to move into institutional care, and the point is there, is it a mistake by this whole system, or is it something which is related to the way everything is paid? Usually institutional care is much more expensive,
So the first, thank you for your questions, and I have the opportunity to go back to that graph once again. So it is right that many people don't use all the care that they are entitled to, and that could be for many reasons. So it could be that there is not sufficient supply, which doesn't seem to be the case. It could be that people are not sufficiently informed. That's a suggestion that I haven't heard before, but that's the nice thing about these types of meetings, that you have other people asking questions other than the Dutch policymakers who are so much into the system. Could be, though I doubt it, because people do get a formal letter from the agency that assesses eligibility, stating how much care they are entitled to per week. So these people all got a letter that they are entitled to 20 hours of personal care per week, and it could be that they have trouble interpreting this letter. But these letters are usually just one page, so I'm not sure if it's that. It could be that it's that they cannot afford so much care. Then again, the co-payments, which can be high, are still income and asset related, so people will never pay more than a certain amount, certain share of their income to home care. What I hear most in the Netherlands when I present these figures is that people have their eligibility assessed as some sort of for precautionary reasons. So people suspect that they may need this care in the future, and apparently the Needs Assessment Agency, which is very unpopular in the Netherlands, is so cautious that it actually grants people eligibility, not for the amount of care that they need right now, but that they may need in the future. For example, when something happens to their health status, or when their spouse dies. So it's the main reason for this difference between what people use and what they're eligible for seems to be because the eligibility assessment is not very strict. As for your, yes, sorry?
Just for clarification, you mentioned this is entitlement to 80 hours, but presumably you can also be entitled to 60 or 40 or...
Yes, so there are 7, I think there are 7 categories, and the lowest one is 16 hours per month, or even 8 hours per month, and this is I think the 5th category out of 7.
So these people could have been offered 16, but they've been offered 8.
Right, yes, and you see the same pattern for all the groups. Though the difference is bigger for the groups that are entitled to more care. So as for your second question, this is which is about the incentives for health insurers and municipalities. This seems to be a mistake. So it seems as if no one really thought about this when they reformed the system this way, which happened for the first time in 2007 when the municipalities were made responsible for domestic care and other types of unskilled long-term care. They could have, if they reduced the amount of care that they pay for, then probably people go to the Needs Assessment Agency and demand for more other types of long-term care. And now the medical long-term care has shifted to the health insurers. That sort of gives some countervailing weight. Then again, both the health insurer and the municipality have the incentive to push people to go into a nursing home. And that is something that has only caught recent attention in the Netherlands.
Yes, thank you. I'm employed within the PSSIU in relation to carer use or involvement in research. I'm a carer myself. I care for my mother with dementia, and she was in residential care for quite a while. And my husband has advanced dementia. The question I'm asking, we haven't heard a lot about when somebody is eligible for care, the level of care that's being offered, whether that is actually reduced because of the resource constrictions, so maybe more people are getting, or maybe less, but where people are eligible, what is being offered. Quite interesting in people not accessing care, and that raises a question in my head about the quality of care, because particularly home care is fraught with problems in the UK. And I'm just wondering what's happening elsewhere in relation to the standard of care and the delivery of that care. But certainly the what is being offered, because I think that's absolutely crucial and relates to sort of prevention and healthy living, which is on the agenda in this country. So just some comments, really, what's happening in the different countries.
Well, I don't have any recent data on that, but the transition from providing a lot of people a little bit of care to really focusing on people with high needs took place maybe 5 to 10 years ago in the United States, because the main financing mechanism has increasingly been these Medicaid home and community-based services waivers that are limited to people who need an institutional level of care, either nursing home care or an institution for people with learning disabilities or a state mental hospital. So that's been the focus. The programs that have been fully funded by the states have tended to be targeting a less disabled population, and those have been the ones most severely cut.
Yeah, quality is crucial and also always a very tricky issue. In my country, about 50% of the people in need of long-term care are cared for by informal caregivers alone. That's in the private families, and I think that's the darkest black box. So we get some insight into that because every half a year a professional care provider has to go into the household and see what's happening there. So there is some kind of counseling then. But I think we know the least in this area. For professional care, there has been a huge debate, and we have developed now indicators. And since 2008, they have been measured, and now we have the measurement of 12,000 ambulatory services, 12,000 nursing homes, and we see that the measurement is not very good. And what we will see in the next couple of months is that the measurement will be abolished, and we are looking for a new kind of measurement, which only shows how difficult it is, because the indicators that were chosen are structural indicators, process indicators, but very few outcome indicators. And what the debate now is about, how to find outcome indicators. You can find outcome indicators fairly easy, but then you have to make adjustments. Because if nursing homes would have the more severe cases, but just evaluated against the outcome indicators, they would get poor evaluations. And so we have to make sure, how can we compare different residents with these outcome indicators? And that's something we are working on, but I can't say that we have found a very satisfying solution by now.
So I'll just follow up on that on the quality side. So the U.S. collects an enormous amount of resident-specific data on people in nursing homes and does so on a quarterly basis, which we use to calculate outcome-based quality measures. And they're posted on a public website for each and every facility that participates in the Medicare and Medicaid program. The problem, so two issues there. One is, are we measuring things of great importance? Are they accurate? Troubling is that they're not well correlated. So that, your common sense notion is that there is such a thing as a good quality nursing home, but if that were the case, then all these measures should be correlated, and they're not. For home and community-based services, we're nowhere in terms of having measures. There's a lot of activity now to try to develop measures, but in order to develop measures, you're going to have to collect data, and no one's willing to bite the bullet and mandate that kind of data collection.
Pieter, do you want to?
A small comment. I think, like in Germany, there's hardly any data on quality in the Netherlands. There is some anecdotal evidence that the quality has decreased a bit because of the reforms. So municipalities are hiring lower skilled caregivers than the public long-term care insurance scheme that used to be responsible for these types of care did before. And I think that's about the only thing that's been established in this regard.
If I might add, this notion of the emphasis on quality with regard to recruitment practices is very, very important, because in Germany they boast a lot of the enormous growth in infrastructure, in personnel, and this is one of these structural capacity indicators. But what kind of people are working there? How did we get so many people into positions so quickly? What have been the recruitment practices and the training behind that? And I think that's something that we don't have much data on, or?
Okay, I think we've reached